Welcome back, it's Jason Walter here, and here's your latest housing market update. In today's video, I'm going to share the latest trends from Redfin because they actually just announced a new housing market update yesterday at the time of this video. And they're also suggesting a new housing market trend right now because they are suggesting that this housing market is plateauing and potentially stabilizing. But as you guys all know, I'll give you guys my honest opinion though because I have some differing opinions regarding this. Anyways, let's go ahead and dive right into the video here. And of course, I hope you guys enjoy watching these videos. If you haven't subscribed already, I invite you to do so. I post frequent housing market updates so you guys can be more informed. So with that said, let's begin today's video. This was just published on the 28th. It says here, since mortgage rates came down from their June high, mortgage rates hit a high this year in mid-June when the average 30-year fix was 6.4%. But now they have come down greatly, and more on that here in just a little bit. But since mortgage rates have come down from their June high, measures of early demand from homebuyers, of course, like online real estate searches and home tours, have ticked up and or stabilized. And again, I'll give you guys my honest opinion regarding this because it really depends on what source you're looking at. And more on that here in just a little bit. And they go on to say the following in this report here. So they're basically talking about mortgage rates dropping by 0.5 of a point. In other words, mortgage rates dropping by 0.5%. But when you look at the latest trends right now, the average 30-year fixed is actually down over 1 percentage point compared to mid-June. And stay tuned regarding that because I'm going to be discussing that here in just a little bit. Redfin goes on to say that their home buyer demand index has been going down, but more recently it has been increasing. They also talk about searches on Google for homes for sale, also down compared to 1 year ago, but also rising as well. And lastly, they talk about touring levels being relatively stable over the past 2 weeks. Again, it depends on what sources you're looking at because when we're talking about touring levels being relatively stable over the past 2 weeks, they're mainly referring to home tours by Redfin agents. But as you guys all know, real estate agents work for a multitude of different brokers. And so when we're looking at the source, it's very important to take a look at what are we talking about here? We're really talking about home tours by real estate agents. They're actually Redfin agents because when we actually look at the national level for all real estate agents, home tours have actually been going down. And also more importantly here, it says the uptick in early demand, in other words, an uptick of home buying demand as of recent, has not carried through to home purchase contracts or home sales. In other words, we're not seeing this giant increase of pending home sales or home sales. Actually, we're seeing just the opposite. Signed contracts and home sales, whether it's an existing house or a brand new house, have been declining. And that's what they say here because they said that pending home sales are down, few homes are being listed, and inventory is piling up as homes are taking longer to sell. Home sale prices continue to decline with the year-over-year growth rate falling to 9%, its lowest level since August 2020. And Redfin's chief economist, Daryl Fairweather, had this to say, which I don't necessarily agree with her regarding this. Normally, I do agree with her regarding a lot of her statements on their housing market updates, but this one I'm kind of scratching my head over. Anyway, she says the housing market seems to be settling into an equilibrium now that demand has leveled off. So there are some signs, some very, very early signs that potentially home buying demand is leveling off or reaching this equilibrium. But when you look at the latest trends, the vast majority of the housing market trends we're looking at right now are showing that the housing market is continuing to slow. So let me briefly just show those with you guys right now. So pending home sales are still down about 15% compared to 1 year ago. If you look over the past 2 weeks, yes, they have been leveling off, but I wouldn't say that our housing market is basically reaching some stability because this is only 2 weeks of data. I wouldn't make long-term projections based on short-term data. I'm not suggesting she's doing that, but to call that our housing market's reaching this equilibrium, I would say it'd be more accurate to say that our housing market right now is trying to reach a new normal. So pending home sales are down compared to 1 year ago, but also we're seeing the share of houses going off market. In other words, the home seller accepting an offer within the first 2 weeks of being listed also going downward as well. We're also seeing the number of houses sell going downward as well, down about 15% compared to 1 year ago. One could say that over the past couple of weeks here that the number of home sales have basically been stabilizing. But again, that's a very short-term trend here. Also, the median asking price has been more or less flat over the past couple of weeks here. But again, this is a short-term trend. If you look at the trend line ever since basically the middle of or the beginning of May, this trend line has been decreasing. Also looking at home sold prices, look at this. Home sold prices also have been declining as well. And also we're seeing more active listings compared to 1 year ago, and it's basically been going straight up here. We're also seeing price reductions absolutely skyrocketing as well. This is not leveling off as well. On top of that, the week's supply of housing inventory is also increasing, and it's not leveling off either. And lastly, the average sale to list price ratio, it's also on a declining trend, and it's also showing no signs of leveling out. But what do you guys think? Do you think the statement here that we're reaching this stabilization of our housing market and then demand has leveled off? What do you guys think? Comment below. Also, according to Redfin's deputy chief economist, who's Taylor Marr, he had this to say: weaker economic growth and poor consumer sentiment are weighing on both home buyers and, of course, home sellers. And he says here that basically mortgage rates have been falling, and this could bring more rate-sensitive home buyers off the fence to move forward with a purchase. So in regards to mortgage rates decreasing, yes, they have decreased about 1.1 percentage points ever since mid-June, which is a pretty big number here, considering that's basically only 1.5 months. So here's the latest trends according to Investopedia.com. So right now, today, which is the 29th, the average 30-year fix is at 5.35%. A 15-year is at 4.72%. Also, according to the Mortgage News Daily, let me just refresh this to make sure this has not changed. It has not. So the average 30-year fix is at 5.13%. A 15-year fix is at 4.45%. So we're seeing this a big decrease because in the middle of June, the average 30-year fix was 6.28%. So in other words, right now we're at 5.13%. So in other words, a decrease of about 1.1 percentage points ever since June 14th. And the reasoning for this is because the yield on the 10-year US Treasury note has been decreasing. But ever since June 13th, the yield has basically been on a declining trend. So the yield on this was about 3.5% on the 13th of June, but now it's at 2.6%. Also, on a side note, when looking at the 5-day trend, the Fed announced they're going to be raising the federal funds rate by 75 basis points on Wednesday, which was the 27th. As you can see here, the yield actually was flat for the remainder of the year, or the day, not the year, for the remainder of the day. And then the following day, which was yesterday, the 28th, the yield actually decreased. And now the trend is also decreasing today as well, down right now about 5 basis points. So what I'm getting at here is that the federal funds rate is not tied directly to mortgage rates. What's tied more directly to mortgage rates is the yield on the 10-year US Treasury note. And because that has been decreasing ever since the middle of June here, that's why we're seeing a decrease in mortgage rates. And also on a side note here, I actually just noticed this. Here's an ad right here that I'm seeing on CNBC here for a brand new home that's for sale. You would not see this 2 years ago or not even 6 months ago. So interesting to see, we're starting to see this more advertising by new home builders because home buying demand is decreasing greatly. As I reported to you guys just a little bit ago or a couple days ago regarding the report from the US Census Bureau that new home sales absolutely tanked last month. In case you guys missed that video, I'll leave a link below for you. But let's get back to this report from Redfin here. So it says here that fewer people are searching for homes for sale on Google. It's actually down from 1 year ago, but up since last May. So if you go onto Google Trends and actually search for homes for sale, you can look at the interest in that search term over time. So here's over the past 12 months. The peak over the past 12 months was actually in August, the first week of August. It declined all the way until we hit basically January, and basically was flat until we hit the middle of April. And as you guys can see here, ever since the end of May, the interest in the search term for houses for sale has been more or less on an increasing trend. Again, this is a short-term trend and also does not necessarily mean that just because people are searching for homes for sale on Google, that doesn't necessarily translate into a closed home sale. But of course, it's a one metric that we should be following though, because if this trend line continues to increase greatly, that could be a signal that home buying demand is increasing, potentially from a decrease in mortgage rates. Redfin also noticed that the Redfin Home Buyer Demand Index, which of course is a measure of requests of home tours and other home buying services from Redfin agents, keyword there, it only has to do with Redfin agents, was actually down 14% from last year, but has risen since the week ending June 19th. And here's a graphic showing this demand index over time compared to 2021, also compared to 2020. I've been talking about this quite a bit. So for the first 4 months of this year, they basically had more requests of home tours compared to 2021, and of course compared to 2020. But ever since the average mortgage rate in the U.S. Surpassed 5%, that was basically in the first week of April of this year, that index has basically been falling. But as of the middle of June, though, and by the way, the middle of June, as you guys recall, the average 30-year fix was at 6.28%. That was the year-to-date high. But ever since then, mortgage rates have been decreasing, and this could be one reason, potentially, why they're seeing more home tour requests for Redfin agents. One thing to note regarding this, though, is that the trend right now, we're still down 14% compared to 1 year ago, and basically on par with 2020's levels. Also, one thing I want to add as well, this is only for requests of Redfin agents again. So I would be more focused on national averages by all real estate agents. And here's the most recent trend that we have from the National Association of Realtors, which is only for June 2022. But on a national level, home tours are down 20% from 1 year ago. Also, when looking at showingtime.com, the number of home tours right now, and this is for the 7 days ending July 28th, the number of home tours right now are down 5.2% compared to the first week of this year. Compare that to 2021, we were actually up 17.3% compared to the first week in 2021. Also, look at this. In 2020, they were up 44.7% in the number of home showings in North America compared to the first week in 2020. Also, one thing I want to note as well, because Redfin is showing that their demand index has basically been increasing ever since the middle of June. Have a look at this, because ever since the middle of June, according to Showing Time, that trend line has basically been decreasing, because on June 15th, for example, they basically had 1.3% more home showings in North America compared to the first week of this year. And besides this blip we had basically in the week of the July 4th holiday, which, as you can see here, not a lot of home showings during that week over the past few years. That's entirely normal. But ever since then, the number of home showings, except for this increase after the holiday period, has been on a declining trend. Especially ever since the middle of July, this trend line has been decreasing. So this is pretty telling to me, because we basically have, 5.2% less home showings right now, which is in the middle of summer, compared to the first week of January, which tends to be a very slow part of our housing market. And again, I really actually love Redfin's home buying demand index, because that's really telling about what's happening with our housing market right now. But we really have to look at multiple sources of data in order to get a clear picture of national trends. So I'll definitely keep you posted regarding that, because if this decrease in mortgage rates down to 5.13% right now, that potentially could cause some home buyers to basically come off the fence and look at houses again and potentially start placing offers on houses. So I'm definitely going to be focusing on this Redfin home buying demand index, as well as home tours, according to showingtime.com. Redfin also noted that mortgage purchase applications are also down 18% from 1 year ago during the week ending July 22nd. This, of course, is according to the Mortgage Bankers Association, or the MBA. This is a report I also shared with you guys as well a couple of days ago, because this report was actually just announced on the 27th. Again, their purchase index was down 18% compared to 1 year ago. Again, this is an index based on people submitting loan applications to buy houses right now. And the purchase index, yes, it's down 18% from 1 year ago, but at the current levels right now, we're at the lowest levels since November 2016. On top of that, total mortgage applications, which of course includes refis, are at the lowest levels in over 22 years. So I'd love to hear from you guys. Do you think, based on this data here, that our housing market is slowing down? And what do you guys think is going to happen with mortgage rates decreasing to 5.13%, given the fact that mortgage rates were about 6.4% or 6.3% 1.5 months ago? I'd love to hear from you guys. Please comment below. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day. I look forward to seeing you on the next video.